Hi, welcome to Christensen Wealth Management. I'm Michael Christensen. Thank you for taking time out of your day to watch this weekly stock market update. Before I jump into the charts and commentary, I would like to begin with the quote of the week. This week's quote is from Franklin Delano Roosevelt, the 32nd President of the United States. He once said, "Happiness is not in the mere possession of money. It lies in the joy of achievement, in the thrill of creative effort." Those are some wise words from FDR. Well, as you can see, I have a different backdrop this week. We are up in Montana visiting my wife's family and my in-laws. And we have a couple of horses behind us. One of them, interestingly enough, is named Trump. And what's the other horse? Sage. Sage is the other horse. So enjoy the view behind me. And I'd like to jump into the market commentary and just tell you that caution is warranted in the month of October. There is much troubling market activity in the U.S. bond market, U.S. stock market, emerging markets, European markets, and a few others that are very noteworthy. So I'm going to show you a few additional charts than I normally do this week, just to make a point. But be cautious because U.S. stocks and U.S. bonds are having a very rough week right now, and I will stop there and just jump right into those charts, beginning with the Dow Jones Industrial Average. Looking at this chart of the Dow Jones Industrial Average, you can see that we've been in this nice upward trend that began on June 27th, 2018. And if we look at the short-term indicators, the 5-day moving average in red and the 20-day moving average in blue, you can see that we still have a short-term strength confirmation. And if we look at the intermediate term indicators, the 20-day moving average in blue and the 50-day moving average in purple, you can see that we still have an intermediate term strength confirmation as well. The only thing that gives me some pause here with the Dow Jones Industrial Average is the fact that we've failed to hold record highs twice in the last 30 days. And I'll show you what I'm looking at. I'm going to switch this chart over to a candlestick chart so you can see the high and low and open and closing prices for each trading day. And let's go back here to January 26th, 2018, and I'm going to draw a red line that represents the prior all-time high set on January 26th, right there. So you can see that from the end of June this year, we rallied all the way up and broke to a new record high on September 20th and a new one on September 21st, and then we failed to hold that January 26th high. Then we tried one more time. We broke it back up again October 1st and October 2nd and 3rd. And we failed to hold that record high because on October 4th, we came down, broke that red horizontal line set by January 26th, but we closed back above it, which means that that held as support for the Dow Jones Industrial Average. The problem I see is that we, as of right now, the middle of the trading day on Friday, the 5th of October, we are flying, screaming down below that prior January 26th high. And we are now right here as of the close of this, as of the middle of this trading day. So the Dow has failed to hold the January 26th high twice. Now the other thing, and it's selling off with volume of trading. The volume of trading has been expanding today and yesterday. So that means that it's not just a quiet day of selling. Now I'm going to also put in a trend line here from that June 28th low and connect the lows here, and you can see that January 28th touches August 15th and touches September 11th, and as of the recording of this video, again the middle of October 5th, we have now broken below that rising trend that began on June 28th. That is another bearish indicator to me. Two failed highs and a breakdown below the trend tell me that there may be something noteworthy to pay attention to in the week ahead. I recommend using some caution when evaluating the Dow Jones Industrial Average going forward this month of October. Here is the chart of the S&P 500 stock index, and you can also see here the nice trend that began on April 2nd, and we've made plenty of higher highs up here. We made a higher high, a record high, August 29th, and on September 20th, and as of October 3rd, 4th, and 5th, we have been selling off with significant strength. Let's look at those indicators. The short-term indicators, the 5-day moving average in red and the 20-day moving average in blue, they're still above each other, but they're really close to crossing. So we may have a short-term weakness confirmation as of the close today or on Monday. We shall see. But the intermediate term indicators, the 20-day moving average in blue is still above the purple 50-day moving average, indicating intermediate term strength as well. One piece of concern is that the price of the S&P 500 has crossed below the 5-day moving average in red, the 20-day moving average in blue, and the 50-day moving average in purple without showing any sign of stopping. So that indicates those moving averages as of right now are not holding. The 50-day moving average may hold by the end of the day. But still, that's a pretty good sell-off the last couple days. Right now, let's go ahead and draw some trend lines in there, and you can also see the breakdown of the S&P 500, which is somewhat bearish. I'm going to put that candlestick chart back into effect here, and let's go ahead and draw one from the low of June 28th and connect it to these lows here. So June 28th and August 15th, we've got September 11th, and then we sat right on that line for several days until October 3rd, and then October 4th and 5th, that trend line was broken with strength. So let's also just do another trend line down here and see where that plays out, and that puts us right there. So that would be the next line of potential support for the S&P. Regardless, the other thing we need to look at is the prior high of January 26th, which applied to the Dow Jones Industrial Average. I'm going to go ahead and put that horizontal line in here with the high right there. And so you can see that on September 7th, we came down, broke below the January 26th high, and then rapidly shot back up again and bounced off it. Now, as of October 5th, we have come down, broken that January 26th high one more time, and as of the recording of this video, we are sitting right on the January 26th high, just waiting to see what happens. So if this trading day, October 5th, we close below that red line, which represents the January 26th high, then that doesn't spell anything very pleasant for the S&P 500 in the week ahead. So use caution and watch to see how this day ends up by looking at the S&P 500 after the close today. Here is the chart of the Nasdaq 100 stock index. Same deal here. We had a nice rally that began April 2nd. Took us all the way up to a new all-time high back here on, looks like about August 29th. We failed, and then we rallied up again, failed to make a new record high, which is somewhat bearish. And then as of the 4th and the 5th of October, the Nasdaq 100 sold off very quickly with a lot of strength. So let's go ahead and put those short-term indicator and intermediate-term indicators on here. The 5-day moving average in red is still above the 20-day moving average in blue, just by a little bit. Looks like it might try to cross today or on Monday, and that indicates the short-term strength. And let's go ahead and look at the 20-day moving average in blue and the 50-day moving average in purple, indicating intermediate term strength as well. So that's still in place. But again, the problem we have here is that the price of the Nasdaq 100 has sliced through the 5, 20, and 50-day moving averages without any sign of support, and that is extremely bearish in my opinion. We'll see how the day ends up, but even if we get a somewhat of a rally into the close on Friday, I don't see this Nasdaq 100 closing back above the 50-day moving average. So that is that shows that the Nasdaq's probably the weakest of the three indexes so far. So use caution when evaluating the Nasdaq 100 going forward into the week ahead. The other trend that I see here is the trend line, and I'm going to go ahead and change this back to a candlestick chart. And I'd like you to see the trend that began on April 25th when we had a low right there, and I'm going to draw a trend line up and touch the next two highs we had there. You can see that the April 25th low connects with the June 28th low and the July 2nd low, and then we've got all these lows here in July 30th and 31st and August 2nd, and then all of these right here. So this trend line has been touched 1, 2, 3, 4. We broke up here to a new all-time high there on August 30th and then failed, came back up, touched that broken trend line one time, failed again, came back up, touched the broken trend line one last time, and then on October 3rd, 4th, and 5th, the Nasdaq 100 just gave up and walked away from the party. It tried so hard from the failure that began here on September 6th to try and keep going higher, but it just did not have the strength. And as of the close, or as of the middle of the day on October 5th, we have a pretty significant downward trend for the Nasdaq 100. Real quick, I have a few bonus charts here for you. The German DAX stock index is continuing to have problems, and if you connect these highs here, you can see that the DAX is accelerating to the downside. We had that one, and then this one. So the DAX is steepening its rate of descent after it made its high here on January 23rd of 2018. It just hasn't been able to get any strength at all. This here was June 14th, and then July 27th, and then the last touch here was September 27th. So, and the DAX is selling off just like the US markets are over the last few days. So the German DAX stock index is looking very weak at this time. Here's another chart that's worth mentioning that reflects the current behavior of the emerging market stock index. This is the Nasdaq Riskalyze emerging market stock index, and you can see that it is continuing to have some significant problems. This chart begins on June 14th of 2017. We had this high along with the US stock market on January 26th, 2018. And then this thing has just gone down and down and down, is just getting punished. Not much, obviously you can see that there's no strength whatsoever. And if you draw some trend lines in here, you can see that we have pretty much a continuation of the weakness, and that trend line is holding. I'll draw a couple of trend lines in there just for educational value here. So those trend lines are definitely holding and keeping this thing in a downward trajectory, and this has been punished pretty good beginning on October 4th and 5th, and we'll see where we close this week. China has been closed for the entire week in trading. It is China's golden week, so China will reopen again on Sunday night. So we'll see what happens. These are indexes that trade even when China's closed and kind of reflect the current prices that the rest of the world is paying for emerging markets stocks. This is not just a Chinese index. This is a emerging markets multi-country index. But right now, definitely having some problems. Here is a second bonus chart of the day, and this is the Morgan Stanley India stock index, and you can see that there is something not quite right with the India stock market at this time. right now, all I want to point out is that strange things are definitely happening overseas with emerging markets, and India is one of them. You can see that this little peak right here was October 1st, and ever since the 1st of October, in just basically 4 trading days, this index has gone straight down just like that. I mean, that's pretty crazy. So there is something not right in the India stock index. This is my last chart of the day. It is the United States 30-year Treasury bond interest rate chart. And you can see that since this little point right here, October 1st, interest rates on the US 30-year Treasury have just taken off to the upside. And it coincides perfectly with the sell-off in the US stock market, emerging markets, European markets, and others. So I am thinking that the primary reason for the stock market unhappiness is due to the big spike in interest rates. And one other thing that I want to bring to your attention here is if we zoom out to 1987 on this interest rate chart, and you look at drawing a trend line from the high of September 1987 down here and touch as many highs as we can, you can see that in the last few months, interest rates on the 30-year Treasury have broken a 31-year downtrend. That could mean rising rates ahead, but we won't know. I mean, we don't know the future, but all it does mean right now is that rates are rising at the moment, and it's putting pressure on many markets around the world, including bonds and stocks, both U.S. and international. So keep an eye on that. Use caution on bonds, caution on stocks, and let's see where we go in the week ahead. Thanks again for watching. Before you go, please do me a favor and click the subscribe button on this YouTube channel, and then click the little bell next to it so you'll be notified whenever additional videos are posted. And in the top right-hand corner of christensenwealth.com and in the summary description of this YouTube video, you will find links to the Facebook, LinkedIn, and Twitter pages for Christensen Wealth Management. Please visit those when you have time and like or follow them while you are there. That way I can communicate with you effectively through social media and these videos. Well, have a great day and a great week, and I look forward to seeing you again in another 7 days. Enjoy the month of October. Bye-bye.